Okay, very good morning. It is Tuesday the 6th of March. Hope everyone is well. Just to give you a quick overview, it's going to be both me and Sam on the briefing, so I'll try and keep things focused on the news side of things, particular market reaction to the Italian election results and also the situation with Trump and this heating up of trade talks that we've been seeing. We'll look at some of the ramifications and what the associated commentary has been from some of the other political members in the US. And then I'll hand over to Sam and he'll look at the charts a little bit more technically and some of the key levels he's got on his charts and that he's looking at for some potential strategies for the day ahead. So first things first, looking at the way US performed yesterday, and I was off the desk for most of yesterday afternoon, tied up with some other stuff, but looking at the charts last night, really impressive recovery in the US equity market, and that obviously seeing the other equity indices follow suit quite sharply. And you know, we were talking about the risks this time yesterday morning about what it might mean, this trade talk for ongoing weakness in the US equity market because of the retaliation effect, more importantly, by people like the EU, Juncker we heard sounded at the weekend, but other countries that might follow suit. And just looking at where we are at the moment, yesterday's recovery, decent over 1% gains across the major three indices in the US, and we've come back up to already this morning, and the US futures test up close toward the high print that was seen on the recovery. Just really, we rallied all the way from the open. I mean, this first green candle here was the open at 2:30 London, and that was the closing bell on Wall Street. So really powerful run higher, and resistance point being tested now, that previous high, and also where we were back on the 1st of March. And you can see that as a previous support point as well back on the 28th of Feb. So this kind of three-phase runoff that we had last week, inspired by an optimistic, hawkish sounding Fed Powell. Then you had the initial tweets coming out of Trump at the end of the week and the big sell-off there. You know, almost 50% of that, well, let's just have a look, has been retraced already. Quite impressively, the US equity market still remaining fairly resilient. And you can see if we break above this current technical resistance point, then you've got that fib level just coming in just above that could potentially be worth just keeping an eye on. The other thing, of course, was the Italian election. And if you were looking at the charts this morning, certainly looking at the case of the euro, we're actually higher in the euro than where we were prior to the election. Only a touch, mind, but the recovery was incredibly short-lived. And if you're looking at the general sentiment, well, the DAX is up about 100 ticks, EurUsd's positive, the euro's higher. You know, what Italian election, you would say, when looking at the market's price activity on the major European assets. So a couple of reasons then. Why has the market looked beyond Italy? And then why is the market not now concerned about Trump? So that's really the two things I want to focus on this morning. First of all, let's have a look at Italy. And this is the timeline. So two real sections here that the guys at RAN have outlined quite neatly. So you've got the timeline. Now, you'll notice here that really things don't get underway. You're probably not likely to hear too much new on the Italian front until really the end of the month. This is when Parliament will gather for the first time on the 23rd of March. And quite notably, actually, from a news perspective, don't forget, 22nd, 23rd of March is the big EU summit to talk Brexit and transition deal. And so actually, probably at that point in time, as a market focus for what will be the hierarchy of events driving from a macro perspective, Brexit will take over at that point, because that's going to be a real key event at the end of March. You go through the various different things, and really you're talking about several weeks of this political kind of stalemate for the moment as they look to potential coalitions and talks that will be ongoing. Now, what would the potential shape of a coalition look like? Well, there's a couple of different scenarios here. You've got the centre-right coalition potential, this being the Forza Italia and the Northern League. This was a touted option going into these actual elections, but the assumption was that Forza Italia would outperform the Northern League, and it's been the opposite way round. So there's question marks now about the possibility of this partnership being formed. as it's unlikely that Berlusconi will want to act as the junior partner in any type of tie-up. The other thing would be, the other option, a grand coalition, Forza Italia and the DP, but again, the Democratic Party had a bit of a disaster. And so, actually, this below-par performance from the DP and Forza Italia combined would mathematically be difficult for them to reach a majority, so they too would need then to support of one of the more radical parties, which would probably make it an unlikely scenario. The other factor you can have is a populist movement, Five-Star, Northern League and the Brothers of Italy. This all comes down to really the power player here being the Five-Star movement, who came out kind of the strongest from the election. And so whether or not there's a willingness of the Five-Star movement to form such coalitions, which at this stage appears unlikely, despite the recent softening of their opposition to coalitions, given their anti-establishment view. So still a lot of uncertainties here, and one of them that could occur, of course, and I'm sure the Italians won't be completely surprised by this, but repeat elections would definitely not be off the table as a possible outcome in several weeks' time. If they fail to come to any type of agreement, then certainly the Italians could go back to the voting booths to have another chance at trying to break the deadlock. So for the moment, as I said yesterday, the Italian election, although it does show some quite seismic shifts in terms of, you know, the new relevance, let's say, of the anti-establishment and the Five-Star backing that's been clearly evident in the way that people have voted, this kind of real shift geographically between the north and south of Italy. However, from a trading point of view, this was the baseline scenario that we would have a hung parliament. So the other major subject, of course, is Trump. And we were talking about really tracking the dollar is quite key, because the dollar and equities have reacted quite negatively to this idea that not so much what Trump's tax tariffs of 25% and 10% on steel and aluminium would be on the US economy, but more so than what would happen when other countries retaliate. And of course, we've had, well, you can see it flashed here as a headline on the Bloomberg website this morning. This is now something which was run by sources over the weekend and mentioned by EU Juncker, but apparently there is now a draft paper where the European Commission has proposed retaliatory tariffs of 25% on the imports of US steel, clothing and footwear and selected industrial goods. So all different types of things that they're looking at. Total worth of imports subject to tariffs, 2.8 billion euros, according to an official familiar with the matter. So this is the type of thing which has meant, and not just from a political but from an economic point of view, has made a lot of people question whether or not Trump is just doing this purely as a political play for the America First policy, with sharp in mind being the midterms later this year. One thing to be totally clear about here is that, don't forget, Trump is saying that what he's going to do, nothing has been done at this point. Much like every Trump policy, is his bark worse than his bite? I.e., can he get over the line this trade deal, if you like, through the chambers of Congress? Let me just give you a flavour of what Congress is sounding like from some of the comments from the key people yesterday, and I'll let you make your own judgment. So Paul Ryan, the House Speaker, an incredibly influential and important person in the Republican Party, we're extremely worried about the consequences of a trade war, and we're urging the White House not to advance with this plan. So Paul Ryan has been someone who, generally speaking, has been fairly on board with a lot of Trump's even most controversial policies, but on this one, Ryan's spokesman last night came out and quite vehemently said that this is the wrong decision for our country. Not only that, House Republicans taxed with the tax and trade policies are drafting a letter to Trump. Chairman Kevin Brady of Texas has urged more targeted tariffs on unfairly traded products rather than broad measures that could hurt the economy and its economic growth. Conservative groups, including the Club for Growth, which is a pro-free market organisation, no surprises there. They've cautioned that the tariffs would hurt the economy and the Republican chances to hold on to both chambers of Congress later this year in the midterms. And then away from the House, the Senate Finance Chairman, Orrin Hatch, whose committee oversees trade matters, has said that tariffs on steel and aluminium are a tax hike on the American people that we don't need and can't afford. Trump should carefully consider all implications. So he's been condemned by pretty much every corner of his own political party as well as the opposition. Not only that, you've got the banks coming out and absolutely tearing into the implication that this would have as a self-inflicting step on the US economic performance itself. Goldman Sachs coming out, delivering a comprehensive critique of Trump's planned metal tariffs, saying that they risk damaging the world's biggest economy by raising costs just as price pressures build, hurting allies more than others and creating a two-tier global market. And if he was trying to get at the likes of China in particular and Russia on this trade war, well, actually it's going to impact people like Canada and Mexico a lot more than it is going to impact someone like China. So the general consensus here, when you start reading the kind of sentiment behind this away from Trump and his ability to really force this through and implement, is this is a bit of a non-starter at this point. Definitely at these levels he's talking about, but whether even or not he can put through anything of what he's talked about on this particular issue is a really big uncertainty at this point. And I think for the moment the markets are seeing it that way, and as a consequence, hence you've got this relative calm and a reversal of some of the moves that we saw at the end of last week. The case being that the general tone on Capitol Hill is that this is not going anywhere anytime soon. So again, it's kind of a classic Trump saying one thing, but what can he deliver is another. So Italy and Trump for now, although both subjects to be monitored, the market's kind of going to be focused, certainly upcoming for the rest of this week, possibly on other things at play. What those other things could be: US jobs data, non-farms on Friday. We got the ECB, of course, on Thursday. Quick run through of some of the other headlines, though, just get you up to speed, and then I'll hand you over to Sam. You did have the RBA interest rate decision overnight. Very little sustained movement in the Aussie currency. They kept rates on hold as predicted by all economists surveyed. It's a pretty similar situation, really, to Australia, to the rest of the world, where the rate of wage growth appears to have troughed. Inflation is likely to remain low for some time, reflecting low growth in labour costs, strong competition in retailing. So again, it's this gradual pickup inflation that they're looking for as the economy strengthens, but wage growth is fairly anemic in that sense in Australia. So they're in the same kind of situation as what we've seen in other countries. Elsewhere, little bit of a U-turn from Bank of Japan's Kuroda, talking about at the weekend, well, we need to start talking about the eventual exit from our ultra stimulative and expansive monetary policy coming in 2019. He's kind of rebalanced this slightly overnight, saying the central bank won't end its ultra loose monetary policy until inflation target is met, and as you'll know, that's probably a long way off from achieving that. And so again, he's just looking to temper back some of any runaway expectations that the BOJ are going to turn hawkish anytime soon. Not going to dwell on Draghi too much, because we're going to talk about him a lot more come Thursday's meeting. I did send you out a research note, a preview for the ECB, so do have a read of that when you have time later on today. Any questions, just let me know in the chat room. But basically, the general gist that Bloomberg are running this morning is that the tide has turned, and actually people are becoming, or this ECB meeting, which was billed as a big one because we were looking out for subtle communication changes as towards gradual exiting of things like the QE program, and being optimistic on economic growth and inflation starting to pick up. Well, actually, most banks surveyed by Bloomberg don't see that happening now in March, and they're looking for the June meeting to be the one where we're going to get much more clarity on ECB's forward guidance in that respect. The reasons why this is being pushed back, well, it's really three things. One, the Trump trade war being reignited. Two, some political uncertainty emanating out of Italy. And then three, one thing they're looking at is the economic data, which was really multi-year highs when we were looking at some of the PMI data. This is the market Eurozone composite PMI and the Centex Eurozone investor confidence indicators, and they have come off the boil just a touch comparative to where we were just a few months ago. And so maybe some need to just be a little bit more patient from an ECB policy setting point of view. Looking at the calendar for today, it's pretty quiet for this morning. So I'd probably want to keep things quite tight in terms of being realistic in trade expectations if you are into anything in a live position for the next couple of hours. Probably looking for the US really to lead things when they come in. Data-wise, it's fairly quiet. You do have US factory orders, which will probably be your main headline reading. The durable goods numbers are just revisions. And then you'll get your API numbers later on in the evening. A couple of speakers, though, to be mindful of. From a Fed perspective, Dudley, who is a voter, is going to be talking at 12:30 about economic conditions worth watching. You've also got Bank of England's Haldane, but doesn't come on until later on this evening at 6 o'clock. All right, that's it from me. Have a good day. I'll hand you over to Sam now to talk you over some of the charts. Thanks.
Hi, good morning, everyone. Just going to start off with the DAX, which I saw, obviously, Michael, you did that trade in the morning there. It's actually hit quite an interesting resistance point earlier on. Let me just clear up this chart here. You can see, I'll just mark up that high. It's and there we go. You can see how well that this area has been respected quite a few times. It made the low. Let me just circle it up here. Where we found on the 15th. Of Feb, and then not too long after that, the 22nd, we then found resistance once we had broken through on that first retest, and then since then it's come back and found a bit of a top there this morning. So important level to the upside to be aware of there. I think if we'd obviously do get another test, there's still some important resistance points above that we haven't really come back to test yet, most notably around here, that low of the 22nd afternoon that we then did break through at the beginning, the first day of March, 12.32, 7.5, I think near that R1 area. So it's definitely a point of interest to be aware of if we do get another sort of breakthrough of this level. But you can just see how important it has been. First real test of that area again has offered some good resistance, and you know the Euro stocks pretty much identical in that respect, in those sort of previous support areas that have now turned resistance, holding very well this morning. Over in the States, yeah, focus would be later on really to perhaps see if we can get a continuation of the risk on move we saw yesterday. Key resistance levels, obviously, other than yesterday's high, the similar to the DAX and that high of the first, and if we get through then suddenly, you know, the stories are we at all-time highs are going to start to come back again. It is quite funny sort of reading the reports. Any down day, it's like, well, this is the beginning of the move going back towards the lows that we made at the beginning of Feb, or any up day, it's sort of panic over. We just have a quick look over at the Nasdaq, which has of course been outperforming the others. You can see still not too far away. Let me just put this on a longer time frame. Still not actually that far away from those all-time highs. Over in the currency markets, just going to change the time frame quickly. Let's mark up this quick for the Nasdaq. You can see quite an interesting area that we're trading at now. For the currency markets, have a look at the euro, which, let me just refresh the chart as well. In terms of levels, I think to be aware of. 1 second. Refresh the chart. You can just see how important this area is just above. Today's R1 marks up pretty well with quite a few other previous highs of the day. This for me is the sort of the most important area to the upside. You can see here 1, 2, I mean maybe perhaps the higher, the 22nd you get in the mix there, 26 as well, and then the high of the 6th. Really key area of resistance for this market to the upside. Similar time, if we were to get there, I'd be looking at other European pairs. Obviously it could be a dollar related move as well, but I'd like to see a bit of euro strength at the same time. That would perhaps see us break through, and then to the upside, any previous lows that haven't really come back to be tested, or the highs, would be good targets to sort of aim for. To the downside, if we just lower this down, where we could find support perhaps today, decent area around the pivot here on the futures, albeit just above where we found support last night. In terms of if we were to break through that, definitely worth, I think, having a trend line on from yesterday's move. Let me just get that up here. We probably, yeah, just found a bit of support on that now, so I definitely would have that marked up. If we do get a breakthrough there, then that could obviously act as a resistance point for the move higher. To the upside, you can see now we're starting to perhaps get squeezed a bit. Definitely would be keeping an eye on this going forward. Moving over to the pound, similar sort of price action in the fact that last few days we have been drifting higher, and again with that trend line probably going back down from the lows of March. I think it's definitely worth keeping an eye on that for any potential downside around 138. Also, where we found a bit of support yesterday around 2 o'clock, could offer a good area for profit taking if we for any down move, or an area where people perhaps would want to get in to see this move go higher. And then from the upside, I would look to get this trend line on here. You can start to see we're sort of getting squeezed to the upside here, so we'd have that on in terms of I'd wanting to see it being respected and then getting a break either way. I think for the pound there would be quite an interesting one. With the pound, always having a look at the FTSE, which with the DAX pushing higher this morning, and well, stocks in general pushing higher yesterday, has continued to push on, just hovering around that R1 here on the CFD. I think if we were to continue to push higher, you've got some pretty key areas, 7200 here, and then the highs that we found back on that 1st of March. So for all equity markets, the 1st of March, the high of the month, definitely an area to be aware of as any point of resistance, or if we're going to see a continuation perhaps into the afternoon, just to have marks up on the chart. I think in terms of levels to the downside for the FTSE, obviously the high of the day, well, the previous high of the day, I should mention, that we broke through as an area of support, which was also the high of the 2nd and low of the, well, the 1st, low of the 1st, before we end up breaking through. So that area, 7160 on the CFD, could well be a good support area if we weren't to push on now. Having a look over at Aussie dollar and the yen. Just get this marked up. Just going to bring it down. You can see here we've got another quite interesting point really for Aussie dollar, where we had found some lows before, finding a bit of resistance now. I think again for these currency markets, just worth having on these trend lines. You can see if we were to come back up, I'm just going to move the other line to today's R2, could be a good point to find a bit of resistance and perhaps continue the recent trend that we have been in. You can see here really since, well, what's that, to end of January, we have been ranging down quite nicely, so I'd be quite aware of that. Let me just have a look if we can get a trend line going this way. We broke through. Okay, there you go. Okay, that makes sort of a bit more sense to perhaps why we sort of slowed down where we did. But if we were to get up to that R2 area, I would expect a similar kind of reaction here for the Aussie dollar. The yen, dollar yen, I should say, really nice area of resistance. Didn't perhaps quite make the lows that we found at the end of February, beginning of March, and the R2. But it did find a good resistance point. And again, for all these currency markets, as mentioned, I would be looking to get some sort of trend lines on there to sort of perhaps act as resistance to the upside. In terms of levels that could act as support, the pivot areas it could be quite interesting, or perhaps previous lows that we broke, previous highs that we broke through, to then sort of act as support levels. But one to keep an eye on here for the dollar yen. Looking over at the commodities space, have a look at gold, which you can see already sort of messing around that pivot area. Price coming down, sort of the similar, well, pretty much all day really. Equities pushing on, and as the Italian election sort of brushed to one side, areas to be aware of for the upside, you can see this is really where the move started yesterday, around sort of 11 o'clock, 11:30, breaking through what was the low. We'd be aware of this to sort of capping any potential upside along with the high of the day. To the down would move, if we were to break through the low, it opens up the door to yesterday's low, and then some interesting support levels that we have found at the beginning of the month and around S1 for today. That will probably most likely be the range for the day. Oil pushing on yesterday as well. The area that I'm most interested in will probably be here, 61.97, the $62 handle, the point in the market where we saw a decent push on yesterday from what was the previous high. Just going to get a trend line on here as well. Yeah, I mean, look, pivot, this sort of area which could act as support, having broken through 61.97, 62, I think will be a decent area of support if we were to get down to that point. Of course, to get there, we've got to come through a fair bit of support now. We have just broken through the overnight low, but it's getting quite choppy as you'd expect at this time for oil. A couple of lower highs as well, just to be aware of going forward. Any questions, obviously, please do get them in the chat, and I'll be posting charts throughout the day as well. But for now, it does seem that equities are continuing their move higher that we saw yesterday afternoon. But I'll just be keeping an eye on the DAX as we're looking perhaps to retest that key area of resistance that's been a key level over the last month or so. Have a good day, and I'll catch you in the chat.